Hello, this is Joe Pryor, the virtual real estate team in Oklahoma City, and I want to talk about one thing that I find very few investment people really talk about, and they really should talk about, which is what is my exit strategy on my property? I'm buying real estate, I'm going to hold it. What if something terrible happens to me? And maybe it's 3 years down the road, or at the end of 10 years, or at the end of 20 years, what do I want to do with that particular property? Now, the first thing that I'm going to tell anybody is don't buy at par value. Par value is what everybody else is buying it for. If we're going to work together, I got to get you a deal, okay? Because I want to protect you against the downside. Part of the problem with the meltdown that we had from 2000 to 2008 is that people kept telling you, oh, there's no downside. Alan Greenspan says, oh, we've conquered market cycles. That's BS. It's never happened. I'm old enough to live through market cycles, and I know that they happen. I want to protect you against the downside. So in real estate, if you put 20 or 25% down, and maybe we have 10% more in terms of value for your property versus what things are currently selling for, you're in great shape. And then if the market is still appreciating, even better. So as an exit strategy, if all of a sudden there is a deep need for money, then if we buy right, that's extremely important. So we look at the downside, try to get the best possible value, but I also look at your wealth position so that you can cover the money that you put out in down payment, the closing cost, everything else, and then have a little bit to be left over. Now, the most common way for serious investors to have an exit strategy is to keep that property as long as possible, but if all of a sudden Oklahoma City starts appreciating 5 or 6% per year instead of 3% per year, and maybe there's another market that has a down cycle. Maybe it's Nashville, Tennessee. Maybe it's Kansas City, Missouri. And so you go, I want to cash out in Oklahoma City because I think I'm at a real high point and I've used a lot of depreciation, and I'm going to do a 1031 tax deferred exchange, and I'm going to buy 2 properties in Kansas City or Nashville because I can get some foreclosures. Well, the 1031 allows you to sell your property, max it out, and take all that money tax-free and move it into the other properties. And so we'll discuss that also. Now, I've got a lot of 1031s coming into Oklahoma City right now from markets like Phoenix and Las Vegas and even out of California, San Jose, Sacramento, because they're doing exactly that. They're buying a property that they can buy at a very reasonable price that has a really good return on investment, and they're selling out at a high point. So one of the things that we're going to discuss with you that I think is an important discussion to have is what is your exit strategy on this? Is it, if I have to sell, this is it, and so therefore I want to be protected? If I want to sell and move on to a different market, this is how I do it, or if I just want to keep it for the rest of my life? We're going to discuss all the aspects of exit strategy. It's an absolutely important part of the discussion. This is Joe Pryor of the virtual real estate team in Oklahoma City, where we deliver traditional real estate values at the speed of technology.